Hi friends, so in this video I'm going to explain about intercompany accounting setup which is done in Microsoft Dynamics 365. You can see here. So I'm in the USMF entity and we are going to see the intercompany setup for USMF and DMF legal entity, and we also post one transaction. So first, before going to the system, I want to explain you the intercompany accounting concept. So in intercompany accounting concept, what we have two entities in which the originating entity means, for example, I am the USMF user and I want to do some intercompany accounting. Intercompany accounting means 1 lakh of the transaction will be posted in the DMF entity, means the other entity, and 1 lakh will be posted in the current company which I am working. Right. So it will be the current company will be called as originating company, and the destination company will be the DMF in this case, in which the other transaction will get posted. So how do these transaction balances that we need to check? For example, the scenario is that DMF has some rent account payable. So DMF have a payable which they want to pay, but they don't have any cash. So they requested USMF entity that you pay in behalf of us. So what is happening? You have in USMF entity, the user will post the rent payable. User will debit the rent payable account, and user will credit the bank account of USMF entity. So one lakh of the transaction will be posted in the DMF, and 1 lakh will be posted in the USMF. But how these transactions will get balanced? Because we need some for example, for any credit side we need debit, and for any debit side we need credit. So for example, in USMF, the bank account will be credited, but what account need to be debited, that we need to set up here. So this is whole setup regarding this only. So in USMF entity, when the bank account is getting credited, so you can see 1 lakh of the transaction is coming from the entry itself, then another lakh of the transaction will come from here, this side. So as I told you that one is originating company and another one is destination company. So here we need to set up like that. So first what we are setting up USMF and DMF relation, and we also have a DMF to USMF relations. So when we have USMF and DMF relations, so what we'll do here, if I add it here, so you can see in the debit side I have said intercompany receivable. So obviously when we have we are paying the expenses, and the USMF entity is US in the originating entity, there is a one account which need to be debited, so it will be intercompany receivable, because in this transaction we are receiving, because we are paid on behalf of DMF, so that's why DMF is our intercompany receivable. So intercompany receivable account will get credited, and likewise, like you can see the name of the account, intercompany receivable USMF and DMF. So likewise we need to create different account for all the relations. For example, for USMF and GBSI, if you see the account here, it will be USMF and GBSI account. And similarly, for in the relations which is GBSI and USMF, the account will be the same, right? So we need to create the main account for each of the relation which where we want to do the transactions. So these accounts need to be created. So here let's understand the whole accounting entry. So Eh, so I have explained you that USMF how the entry will get posted. Now in coming to a DMF, what will happen? 1 lakh of the transaction will come from here. Rent account will be debited, but what account will get credited? So what we can do? We can come to this screen. What system will do? System will come to this screen. System will see that the USMF and DMF relation. Because why USMF and DMF relation? Because the originating company is USMF. I've explained here. The originating company is USMF. But if the originating company was DMF, then this relation will be checked by the system. But in this case, this relation is checked USMF and DMF, and you can see in DMF entity, if we are doing any credit, then credit will be posted in this transaction, right? In the destination entity, any credit will be posted here. So this account will get credit. Now we need to post one transaction in USMF entity. Let's go to general screen and create a new transaction. So we can use any daily journal to create this transaction, or we can also create a intercompany journal and we can then use that journal for this purpose. But I'm going to use daily journal, general journal, right? Now, how we need to create the intercompany transaction? See, you can see the company option here, company column. So in the company column, I will select DMF. So this account, the DMF account, rent account, will get debited. And let me also choose the business unit and other dimension so that it will not throw error of the dimension. Yeah. Now coming to the USMF side, so UFMF bank account is going to credit, and you can see immediately the system has populated the exchange rate. Why exchange rate? Because in the DMF the accounting currency is euro, in USMF the accounting currency is USD, so that's why the exchange rate gets populated, right? You can see the exchange rate here, and even if you want, you can also change it. For example, if I just change it to 100, then what will happen? For example, see, if I just change it to not 100, at least 1110, then so it means this entry will get posted at 1110 in the DMF company, right? Now, let's just post this transaction and see the impact. So my originating company was USMF. Let's see method detail. Posting without amount cannot be made. Okay, we forgot to add the amount. So rent account will be debited, and let's post it. So in the USMF entity, which is our current entity, the voucher will get posted at 100 with the currency USD. But in the DMF company, it will be posted at this rate by converting at 1110 rate, right? Now let's go to voucher, and you can see that the intercompany receivable account is getting debited, bank account is getting credited as per our example, right? And in the DMF entity, so if you want to see the related vouchers, then we have an option of related voucher. If you are not able to see that, then there will be three dots, and then you can click on that, and then you can see the related voucher option. And here you can see the voucher which is posted in DMF entity. So you can see the entity has changed automatically, and here we can see the intercompany voucher that is posted in the other entity, and it is intercompany payable getting credited, and rent expense is getting this one. So, and you can see the amount as well, amount in euro, right? So, so this is how the we do the transaction in this transaction using intercompany accounting. So that's all for this video. We'll meet in our next